Dear ladies and gentlemen, warmly welcome to our late afternoon session of the Wirtschaftsbeirat Bayern. It's great that you are all connected. We have a very, very interesting topic we are going to talk about today. That is the green financing strategy of the European Union. What can businesses and industry expect? I'm very happy that we have great, renowned experts who are going to discuss this topic with us this afternoon. And let me first of all warmly welcome the European Commissioner for Financial Services, Financial Stability, and Capital Markets Union, Commissioner Merit McGuinness. It's a great honor and pleasure for all of us that you are sharing your time with us and that we are going to discuss such an important topic right now. So warmly welcome. You have a lot of really important responsibilities right now. You are in charge of preserving and improving our financial stability in the European Union. You have to lead the work on completing the banking union and the capital markets union. You have to ensure a common approach with member states on cryptocurrencies. You work on fighting money laundering, and a lot of other responsibilities lies within your portfolio. But the topic we are going to discuss today, the financial strategy, the green financial strategy, that is, I think, the core which we are happy that you are going to share your thoughts with us today. Ladies and gentlemen, let me also warmly welcome our two other renowned speakers. I'm really happy that my dear colleague Markus Ferber is joining us today. Dear Markus, you are a long-standing member in the European Parliament. You have an excellent reputation on all issues having to do with the financial markets, with economic issues. You are the EPP coordinator, the speaker of the Econ Committee. You worked on a lot of really very important dossiers, topics during the past. Only one to mention, the MiFID regulation. So it's great that you are with us this afternoon as well. So warmly welcome. And finally, last but not least, I'm really also proud and honored that Professor Dr. Zeidler, Franz Christoph Zeidler, is going to join us this afternoon. He's the chairman of the Committee for the Financial Markets from the Wirtschaftsbeirat Bayern. He is also a very renowned expert on financial issues, former vice president of the German Bundesbank. He presented the Bundesbank also in the meetings in the European Central Bank. He worked on the market banking supervision in the Basel committees, etc., etc. You have also a very long list of activities and of articles also published by you. So, three experts, it will be a great session. So, without further ado, I'd like to enter into our discussion now. Well, we are going to talk about the taxonomy. We are right in time for discussing that topic. Actually, last week on the 21st of April, the European Commission published its delegated act. Just to remind everybody who is listening to us right now, the original goal of this taxonomy regulation was to encourage private investment in sustainable activities by providing a common reference for investors. So it started all with a reporting regulation, but taking care of what's been discussed in Brussels and everywhere, the references to the impact of this taxonomy regulation and the delegated act is going to be much broader. That's also what's going to frightens some of us. So we had long discussions on, what does it actually mean? What are the consequences for the financial markets? What are the consequences for future legislation coming up, in particular the legislation under the Fit for 55 packages, what implications that is going to have? So a lot of questions are still there, and that's why we are so happy to have you all here discussing that topic with us. And without further comments now, I'd like to give the floor to our Commissioner, Merit McGuinness. And once again, it's great that you're joining us today for this discussion. Please, Merit, you have the floor.
Well, thank you very much, Angelica, for, first of all, the invitation. So, guten Abend, and really happy to join you this evening and to be in the good company of Marcus and indeed the Honourable Professor. Perhaps I should also say that up until over 6 months ago, I was with you in the European Parliament and would have voted on many of these regulations that we are now discussing this evening. And I find myself on the implementing side. So maybe I'll bring that, if you like, double focus to our conversations. But let me start by saying that in the last 14 months, a great deal has changed because COVID-19, I think, has highlighted vulnerabilities in the European structure, if you like, that we were not prepared for a public health crisis, and our economy and society had not factored in either through spending in public health measures or infrastructure what can happen when there is a pandemic. So I think we've learned a little bit from that we need to prepare better and be more resilient. And in that context, we need to perhaps use this crisis to build back a European economy and society that builds in resilience, that is both fair and sustainable. And in a way, I think the issue we're discussing around sustainable finance is part of that conversation. I do accept, as Angelica has mentioned in the introduction, that for a lot of businesses, for individuals, change is difficult, and there is a lot of concern around SMEs as to the impacts of all that we are doing, which is why this evening I would like to listen to those concerns as well as be involved in the conversation. However, I would say that to some extent, we are doing what the political leaders have asked us to do. On sustainable finance, the Commission has been working on this since 2018. But our leaders at Council, the leaders of the 27 member states, have committed to climate neutrality by 2050. That's a very clear goal. It's a very ambitious goal, but it does mean that we need to act in order to reach that target, particularly around climate. There are other environmental issues as well, but the climate target is very clear and very fixed. What we've also calculated is the extent of the investment required to meet that target. So even to get to our 2030 climate and energy targets alone will require additional investment of about 350 billion a year over the next 9 years. So this is a very significant requirement in terms of private investments. And we know that public investment will not be enough. The private sector is crucial. But I think I'll also mention briefly that we do have Next Generation EU. We have the Recovery and Resilience Facility of over 670 billion, and 37% of that spending is to be targeted on climate investments and reforms. And equally within the European Green Deal Investment Plan, we have InvestEU, and that programme will support again this future orientation of our economy to mobilise also private finance towards sustainability. And I think it's just to be aware that both the public and the private side are working together in relation to delivering on our climate targets. There is also this do no significant harm criteria, which is an added, if you like, criteria that requires us to look at activities from two sides, whether they are making a significant contribution to our climate targets, but equally not doing significant harm to our other environmental objectives. So it's quite a tight, if you like, focus when it comes to the regulation itself. I've mentioned that the mobilizing of private investment will be crucial to achieving our targets. I think it's true to say, if you read and listen, that there is certainly in words and perhaps also in reality an increasing demand from investors towards more sustainable investment options. We have had in recent times the large asset managers, big pension funds, talking about this issue, wanting companies to address sustainability because their clients are looking towards sustainability for the future. I think it's also true to say that this will increase over time, but will it be sufficient? Because we do see that investments in fossil fuels has certainly not decreased. So it is an interesting part of the conversation as to, are we on the right path towards achieving all these targets? But yes, there is a demand, and therefore to bring this together. The work we have done in Parliament with the Commission and with the Council, particularly around the taxonomy regulation, is about bringing, if you like, a classification system around what is sustainable so that we have transparency, and so that both companies and the financial system can identify, using proper information, what is required in each economic sector when we define sustainability. This was not an easy task. I know when it was going through Parliament, when I was still a member, this was obviously a very hot topic. When we were revealing the details of the Delegated Act around very specific granular criteria for a number of sectors, it led to a lot of debate, and indeed we will await the scrutiny of the co-legislators around the details that are contained in a document of over 500 pages. I mean, so far there's always a focus on what people are concerned about. And maybe to say very briefly what isn't in the Delegated Act. So, for example, agriculture is not in, and the reason it's not in is because we have to respect the co-legislators working on reforms of agriculture policy. That should be concluded relatively soon. And in the next evolution of the Delegated Act in the taxonomy, agriculture will be included. On forestry, for example, and bioenergy, a lot of debate there, depending on your view. Some regarded our criteria as being too strict, others as being quite the opposite. And again, the criteria there will be subject to review. So gas, for example, was not included this time for reasons that when we did have a draft around gas, it met no one's criteria, if you like. It did not satisfy the member states where gas is regarded as an important fuel for transition, and those who feel that it is a fossil fuel felt it should not be in the taxonomy. So there were difficult issues, which I think took from a substantial part of the Delegated Act and the taxonomy, which has been welcomed by industry and the financial sector. While it is demanding for certain sectors, the view is that at least it gives clarity of what is required, and therefore has been welcomed. So again, this is now left for the co-legislators to look in detail and to make a decision towards the end of this year as to what will happen next. But it is important that we have a taxonomy that is a powerful tool. So it identifies the sectors in specific detail, and it contains, as I said, I've mentioned what it doesn't contain, but it does contain buildings, transport, manufacturing and energy, amongst many other sectors. And just to give you an overall assessment, the criteria cover activities amounting to roughly 40% of listed companies, and in sectors that are responsible for almost 80% of direct greenhouse gas emissions. So it's quite a far-reaching Delegated Act in terms of the amount it covers in relation to greenhouse gas emissions. Now, when will all this kick in? So companies and financial market participants will start reporting on how far their activities align with the taxonomy from January of next year. And that's in accordance with the taxonomy regulation itself. Also, 2 weeks ago, on April the 21st, we proposed and adopted a corporate sustainability reporting directive. And if you like, this is the new non-financial reporting directive. And what this is about is that corporates will have to report around sustainability. So it's what it said on the tin. And it should lead to clearer and more reliable reporting by companies on sustainability. It should also get us to move away from the situation where we're today, where companies can choose from many different sustainability markers that are out there, which has fragmented, if you like, the reporting. This should, when it goes through the co-legislative process, streamline all of that and give companies more clarity around what they need to report. But clearly we will have to identify the standards. And in time, the thinking is that we need to put financial and, if you like, the sustainability reporting, sometimes called non-financial, on the same footing. But I always say that to get the financial reporting system in place, that took a long time, a lot of debate, and equally to get sustainability reporting in place and mature will equally take time. And indeed, there are areas around many pieces of our legislation where the timings are difficult for the companies and for the financial system. But I think we were under pressure to advance on a lot of these issues because our time frame around achieving climate neutrality and indeed higher ambitions for 2030 required that this, if you like, took place and that we put these instruments in place. So why are we doing this? Of course, the reason we want to have all of these measures in place is to reorientate the financial system. And essentially, we want money to be invested in sustainable activities. And therefore, we need information, and we need to make sure that the information is supplied by companies and used by the financial system itself. Because if we don't get these investments, there will not be change. So it is quite interesting that I find myself looking after an area of the Commission, traditionally quite technical, about banking union, Capital Markets Union. Angelica, you listed the range of activities we cover. We now find ourselves in the centre of this environmental and climate transition because there is an understanding that money is required for change to happen. So that's why we are front and centre of all of this. We already have the Sustainable Finance Disclosure Regulation. And again, I think all of these pieces are coming together in a coherent way. However, I can understand from the point of view of business and SMEs in particular, there is a concern. So we are aware of that. And we're trying to be very proportionate in relation to avoiding unnecessary costs and bureaucracies for SMEs. So we're proposing to apply the reporting requirements to large companies and all listed companies, including SMEs, but special arrangements for the listed SMEs. So we would have simpler standards and a 3-year period for the requirements to be phased in. So we have an understanding that for SMEs, it is not quite so simple as perhaps for larger entities. And I think that's written into what we've already done. So in terms of the wider issues, we also have looked at technical rules around what investors, information they should get from their advisors, whether it's around insurance or investment, that the idea of sustainability has to be built into this client-advisor relationship. In other words, that the products that the advisor is suggesting as an investment form needs to meet the sustainability needs of the clients. And again, it'll be interesting to see how far this goes. But for now, there is this increasing demand. I've mentioned the area of transparency. So I think that's very clear. Information is about transparency. And then we would insist and hope that the information is used and used effectively. Lastly, just to say a few things, we will have a renewed sustainable finance strategy, and this pulls together both what we're doing in Europe and indeed the international context. I would say that I certainly, as a former member of parliament and somebody that was elected in my member state, understand that the scale of the transformation is enormous. So I don't underestimate the concerns of small businesses, particularly in the context of COVID, fearful of these changes. On the other hand, when I say to companies, looking at your supply chain, forensically examining your business from the point of view of sustainability is also a useful management tool. However, and finally, Angelica and colleagues, what we need is your voice. We need to hear from business, small and large, about where you see problems, but also opportunities. We need a strong dialogue. And that's why, Angelica, when you suggested this meeting, I was really happy that I could take part and that I can listen and observe and perhaps answer some points of concern that you would have. But the path has been set from 2018. It is now coming, if you like, to a situation where most of the legislative pieces are in place. More has to be done, and now we need to see it implemented in a way which doesn't damage our competitiveness at EU level, but if you like, enhances it. And I think that is the challenge. So thank you, Angelica. Thank you, colleagues, for the opportunity to address you this evening.
Thank you, Commissioner. very much for outlining the thinking of the Commission, European Commission, when presenting the delegated act, the taxonomy regulation. Thanks a lot. I have already noted a lot of questions, but I think, well, let's move to our next speaker first of all. I think it was good that you addressed, the issue who is in, who is out right now, what comes next, the international context, addressing the issue of the SME. Small and medium-sized companies have a different view, but well, let's wait. Let's move to our next speaker, which is Markus Ferber, because I know he had a lot of discussions in his committee, like we had in the industry committee as well, on gas and nuclear infrastructure. That comes later on. But let's listen to Markus Ferber next, and then move on to Professor Zeidler, and then I think we will have a final round of questions where we are really happy to answer. Again, Mary, thanks that you are so open. Well, we know each other for a long period in the Parliament, working closely together, and that's what always been highly appreciated. You listen, and you are not only listening, but you care about what colleagues and representatives tell you. So thanks for that, and let's move to Markus Ferber. Please, Markus, the floor is yours.
Yeah, thank you very much, Angelika. It's a pleasure to be as well, and greetings, of course, to Myrat. We meet regularly, so we continue our meetings now in this way. But honestly, I highly appreciate your good cooperation with the European Parliament, especially with your committee, the Committee for Economic and Monetary Affairs. So therefore, great thanks. And sometimes it's the right punishment that colleagues who did follow us as legislators, it was Econ and the Environment Committee who made the taxonomy legislation. So you followed our advice there, and now you have to take the burden to deliver the level 2 measurements. Sometimes these things are happening, but you do it in a good way. And I'm really happy to have a commissioner with this kind of openness and cooperation. I appreciate that. But coming to the issue, I think sustainable finance is certainly one of the very hot topics of our time in politics and in finance. We see that there's a rising demand for sustainable investment among institutional investors and retail investors alike. At the same time, there's also a need for more investment in green technology if we want to achieve our lofty climate objectives. While this sounds like a match made in heaven, supply and demand struggle to find each other. And that is what we had to bridge. One of the key problems is a lack of a common understanding of the very concept of sustainability. While there are literally dozens, if not hundreds, of sustainability ratings out there, they often measure the concept somewhat differently and somewhat equally, which adds to the confusion. In this instance, the market does unfortunately not provide the best solution. Therefore, there is an argument for regulatory intervention to bridge information asymmetries, and that is what we did with taxonomy. When I followed the debate about sustainable finance, however, I can clearly see how distinct ways of thinking about the issue and two factions arguing from very different perspectives and for very different things. It is essentially a pragmatic view versus an absolutistic view. The pragmatics, where I count myself belonging to, see sustainable finance as a tool to help investors make better decisions by making sure we are talking about the same thing when we say sustainability, and by providing investors with the right set of data to make an informed decision. The other side of the spectrum, the absolutist view, has a very different view of sustainable finance. They believe that they have already found eternal wisdom and are therefore capable of dividing the world into good and bad economic activities. They see sustainable finance as a tool to turn off the tap for what they perceive as undesirable economic activities. Arguably, this has very little to do with a market economy anymore. In the debate, those voices are often very loud. We have them in the Parliament as well, and they are noticeable and tend to dominate the debate, but they are not necessarily in the majority, which is very important in the democratic system, and honestly, they are not properly right. In fact, I believe by taking such a hard-line approach, they often do a disservice to sustainability. In sustainable finance, nuances matter. Therefore, when talking about sustainable finance, we need to be very clear about a few things, and I would like to point out 4 things in particular. Firstly, sustainable finance is about financing the transition towards a less carbon-intensive model, not about financing the steady state in 2050. Secondly, sustainable finance should therefore be inclusive. Excluding a bunch of industries because they are not the leaders of the pack yet does not make sense. Thirdly, sustainable finance should be voluntary for both investors and investees. Markets provide the right incentives here, but we do not need to force anyone into sustainability. And fourthly, sustainable finance needs to be very mindful of producing too much red tape, particularly for the real economy. We will not solve all the problems and save our planet by introducing bureaucracy. Disclosure obligations do not solve any problem on their own. In that sense, I have doubts that we really need all the new disclosure requirements of the Corporate Sustainability Reporting Directive, for example, and we will go to discuss that in the next month on European level. If we keep those points in mind in the debate about sustainable finance, this would already be a good starting point. I leave it with these short introduction remarks, and I'm ready and open, of course, for the discussion, because I don't want to add what Myriad already has said very clearly. So therefore, as an addition, a view from the Parliament side. Thank you very much.
Markus Ferber, thank you so much for your comments, for your assessment on the proposals laying on the table right now. I'm sure Merit is going to comment on that as well. And Markus, just for you, maybe also at the end, if you allow us also to let us know what the procedure now is in Parliament, or as regards the delegated act, how the discussion is going to further continue, and what means do we have to react. So that's for the time being. But I would now like to also invite Professor Zeidler to give his comments on the proposal and to give us an assessment. Professor Zeidler, Merit, for your background, he worked on a very solid paper in which you already found an assessment. This is published by the Wirtschaftsbeirat Bayern. So if anyone being interested, please have a look at our website, where you can find also this very interesting position paper. But we have him now here right in our session, and that's why Professor Zeidler, please be so kind and take the floor and let us know what you think about, taxonomy, delegated act, and the whole sustainable finance strategy of the European Commission. Please.
Thank you for your introductory words. I'd like to express my thanks to the Commissioner for her presentation and the insight she's given us. And at the same time, I would like Markus Ferber for his words and for maintaining his clear course in this topic and many other issues as well. As time is limited, I'll focus particularly on the taxonomy and the planned border tax. As Angelika and Markus know, as many of our compatriots, I belong to the club of outspoken people. So I'll get straight to the point and will concentrate on 4 questions. The first question refers to the underlying economic concept of the Commission in its green financing strategy. It's a rather fundamental question. What understanding of economic policy is it about? Is it still modeled upon an open market economy, which is guaranteed by the treaty, by the way? Or is it modeled upon the idea of a planned and steered economy, where the government interferes directly in the economic process? Of course, the objective, the target of climate protection is uncontroversial and of utmost importance, but the end does not justify all kinds of means, and a correct diagnosis does not justify any kind of medication. The reason I'm concerned is the taxonomy is a delegated act, and the same as the planned border tax. They all claim to assess each economic activity according to its climate relevance and according to its overall ecological sustainability. And they do this in a sector-specific and product-related way, not in a way of relying on the CO2 price and its markets incentives. You know the keyword ETS, emission trading system, internationally connected. That would be an alternative. Again, under the taxonomy, each economic activity has to be assessed, including its supply chains and production processes. This is what we call traditionally in Western philosophy a probatio diabolica, a devil's proof or a devil's decision, which presupposes an omniscient, all-knowing decision maker who does not exist in this world. And we know from economic theory and experience that a rather bureaucratic approach like this will lead to lower growth and lower standards of living over time, and even more. This approach will open a huge gateway for arbitrariness and for all kinds of lobbyism about the detailed criteria and the following decisions. Be it lobbyism in the traditional form from the industry, or today more important, lobbyism from NGOs playing perfectly the piano of moral indignation. For reasons of time, I'll drop the examples for this and would just like to add that in principle it's the same problem with the planned border tax, or takes the euphemism border adjustment mechanism. In theory it's clear, but in real life there will be much leeway for arbitrariness, for lobbyism, and above all at the international level. This border tax will be understood as a signal of unilateralism and of a Trump-like anti-globalism. Meanwhile, I'm old enough to remember the European Community when it started in 1958. It started with a pledge, the pledge of reducing and abolishing customs. 60 years later, it invents new customs and risks international trade conflicts. Not the best case for congratulations. The second question is shorter but weighs just as heavy. It refers to the effectiveness of the climate strategy and the effectiveness of the sustainability strategy. It has to do with a large number of competing climate-related and sustainability-related instruments which overlay and override each other. The question is, are there any deliberations with the Commission to reduce this bulk of competing and sometimes overriding climate-related instruments? Example, in some areas there is a market-related emission trade system, but its signals are distorted by a wide range of product-related bids and prohibitions, emission limits, subsidies, taxonomy criteria, quotas, and so on. Take as an example just the unlucky story of the Euro 6 or 7 standard for cars. Perhaps one can argue about the best system of climate protection, but there should be no dispute that a lot of overlaying on sometimes contradictory measures will lead to lower growth, to lower wealth, and the political extremes getting more attractive. The third question refers to one important aspect of the regulation. As you have outlined, Ms. Commissioner, the taxonomy refers so far mainly to marketable instruments, financial products, bonds, and so on. Brief, it addresses the financial markets. The question is, are there any deliberation to apply this methodology, to apply this taxonomy also to measuring the credit risk by green or brown factors that would interfere with the day-to-day credit business of banks and could pretty much hurt our prospects of growth? In this context, I would like to give you a historical reminder. Before the financial crisis in the US broke out in 2008, the US government distorted, albeit with good intentions, but it distorted the credit risk at the time not by environmental factors, but it distorted the credit risk by social factors to help poor people. So they reduced the cost of subprime loans and subprime mortgages for underprivileged people. The rest of the story is well known. It created a bubble, the bubble bursted, and the world is still suffering from the fallout. Allow me a fourth and last question, which has to do with the procedure the current and future regulations and delegated acts are prepared. In this preparing process, the legal acts In preparing these legal acts, the new built platform of sustainability plays an important role. Some observers even suspect that this platform is designed as a nucleus of a future climate bureaucracy of a sustainability agency or something like this. How do you assess this idea? And how do you think about giving this platform at least a better balanced composition? If you look at the composition of the platform, it looks to be very lopsided. Strongly represented are representatives of the civil society, NGOs, experts nominated by the Commission, and so on. Whereas the real economy is severely underrepresented. The companies concerned, not to mention the small and medium-sized enterprise sector, does nearly not appear in the composition of this body. And last but not least, let me add my mantra in this context, that there is a democratic gap which should be closed. Such far-reaching acts as sustainability criteria, which will transform the whole economy, seem to be more a matter of the European Parliament than of the executive branch. Thank you for your attention. I hope to have not overdrawn my time account.
Professor Zeidler, thank you so much for your clear words and also for expressing your concerns, because that is what we hear in all our political discussions and debates, and it's good really to address that now vis-a-vis Commissioner who is in charge of taxonomy and the delegated act. So I have again also a lot of questions, but a lot of issues have been addressed by Professor Zeidler and Markus Ferber. Dear Commissioner, would you be so kind to take the floor? Just let me stress that I fully agree also on the last topic mentioned by Professor Zeidler, that is the democratic gap. It's perfectly right, by this taxation, this regulation, and the delegated act, the transformation and how to streamline the financing of that it has such an enormous impact on industry and all the sectors involved. And the form of a delegated act is not the right one. I know that that is what had been decided before you became commissioner, but just let me say, if we arrange for at least a sort of structured dialogue also in the European Parliament, I think that would really help to bring Parliament and the political debate into the whole process of defining, what is sustainable and what not, and others issues have been addressed. So please, Merit, within the time frame which is still left, please answer as many questions as possible. Thank you so much, and please take the floor.
Well, thank you very much, Professor, for being outspoken, because we do need outspoken people. So thank you for that. And Markus, equally, thank you. There is one issue that I think was common in both presentations, and that is a concern about who is making the decisions and this democratic gap, if you like. So I think it's quite clear that the taxonomy regulation gave the Commission if you like, the remit to have a delegated act. And I think there were some difficult issues, and this was perhaps why the Commission were handed the instrument of a delegated act. Having said that, and I think you'll understand that it wasn't just something that was produced from the platform and we took it and we published and that's the end of it. There was a lot of discussion with many stakeholders about this issue to try and get a delegated act that met sustainability criteria, but also was politically acceptable. And as you know, around gas and indeed the nuclear question, we still have these issues to deal with. But I take on board what you're saying. To add to that, a point Markus made, and maybe it's something that I've always felt throughout my political career, that sometimes when you have an issue that is difficult, you have two sides. And I think when it comes to climate and environment, we need really to draw together, because it isn't helpful where we have, I think Markus used the words pragmatism and absolutism. Well, whatever we use, we have one side believing this and the other having a different view, that we will not make progress, we will not evolve and transition in a coordinated way if we have that constant divide. And maybe that's a plea for me to get people to perhaps listen to each other better and try and work together in a more harmonized way. Now to the outspoken remarks, Professor, around taxonomy and whether it is or not the right instrument. I suppose it is the instrument we have today. Does it fit well with the other issues around carbon pricing, the carbon border adjustment mechanism? Is it effective, was your really big question here, and will it not lead to distortions? So a few points. One, Europe is leading on this. We are perhaps in a better place because now the US is coming into this conversation, recommitting to Paris, looking at what Europe is doing, not committing to a taxonomy, but certainly not turning away from where we are. So we have a chance, if you like, to influence the international discussion around sustainability. And I think it's good to be in the lead. We don't want to be too far in the lead either. We want people to come with us because Europe on its own will not address the climate challenge. We need the global partners to go in this direction. So I think that's hugely important. Whether this, and this is a pessimistic view you paint, that this will lead to more bureaucracy, lower growth, lower wealth. Look, I think that the European Green Deal is about the opposite. It is about sustainable growth, quality jobs, reskilling young people, and making, if you like, Europe better for young, because a lot of our young people, even with COVID, find themselves out of work, not being able to aspire to owning a home, not sure about their careers. And I think that if you look at the Green Deal, or, you know, this is a growth strategy. And I think it has that potential if we get it right. And then this leads to your clear question is, will all this be effective? If you were to look at the complexity of all these instruments, I mean, it could be very off-putting. But for me, it's very simple. And it is this, that companies who want to survive in the future need to look at everything they do and ask themselves, is this sustainable? So they will be getting this information for their management perspectives. We want that information to flow to the financial system so that investors, pension funds can see what corporates are doing and decide to invest in them. And I would have thought that there's a logic that if you're investing in the long term in companies, you want to make sure they have a long-term future. And some of our corporates today don't have a long-term future because their activities are not even remotely taxonomy aligned or even in that direction. So you can make it complicated, but you can equally distill it down to very simple concepts. And in a way, I remember working prior to COVID in the Parliament because I was on the Environment Committee and being aware that in our pharmaceutical supply chain, we were vulnerable. We were relying on one company for much of our raw materials, and if a problem occurred, we wouldn't have the ingredients for some of our pharmaceuticals. I did not know in 2019, when I was talking about this, that in 2020, we would be exactly in that situation. So to some extent, I think COVID should really alert us to this problem around sustainability, vulnerabilities, and resilience. And rather than us seeing what the Commission is doing with the co-legislators, because we are not dictators, we work with co-legislators and we value, of course, the experience that the elected members bring to this conversation. But I think our joint and shared, if you like, objective should be to say that what we are doing, while it may sound complicated, is about being prepared for the future, making sure that our industries, our sectors, whether they're large or small, prepares for the future, and that the finance that's available and necessary for the transition becomes available. Last comment, where I think we have work to do is on the transition, because if you meet the standard in the taxonomy, you're going to get finance. But honestly, the big change will come by investing in those companies that want to be more sustainable. So some regard this as like this 40 shades of green. And in a way, I think there is partly truth in that you might need a step-by-step approach, so a transition that is timelined, rather than maybe Marcus's terminology, an absolute position. And there's where our renewed sustainable finance strategy, in my view, needs to come forward with more, if you like, depth around that particular point. And lastly, again, to repeat the point that the destination has been set for us by the political leaders. But equally within our member states, there are huge challenges and many different challenges across the entire sector. And Marcus's point that this is voluntary, absolutely it's voluntary, but But clearly we want it to happen. So we want the taxonomy to be an enabler of change. So both a pull and a push factor for both the financial system to look at how it has power to transition the economy, and for companies to see this access to sustainable finance as a key to their future. So I would hope that with your outspokenness, Professor, with Marcus's diligence, with Angelica's, knowledge of this SME sector, with my background and my experience, that we can, if you like, demystify this process and make it work, so that we don't see it as a drain on our sectors, but equally that I'm open to listening to when I hear concerns and being open to try and address those concerns as we are around SMEs. Back to you, Angelica.
Thank you very much, Commissioner, and also for your comments and your answers. I'd like to add one issue again, and maybe you can comment on that briefly. That is the issue of small and medium-sized companies. Yeah? And the concrete question also, there are really concerns expressed that, the credit risks are going to be measured also exclusively along the sustainable criteria. And that is what a lot of SMEs and the backbone of our prosperity in Europe, in a lot of member states, relies on our SMEs. That is what they really fear, that, at the end of the day, if you go to your commercial bank and you ask for credit, you ask for a loan, and the only thing they tell you, you are not sustainable enough. Full stop, no credit is going to be granted. So how can we ensure, in particular, the SMEs, that this is not going to be the case? And if you would be so kind to address that issue once again, I would be happy. And then I would like to round up and also ask Markus Ferber and Professor Zeitler to come in again. Thank you, please. Back to you,
Angelica, absolutely. I feel and understand the concerns of SMEs because I've met them. And I think we have the added difficulty that SMEs have been very badly impacted by the COVID crisis. So I think there's a heightened fear. But frankly, let me reverse the question. Would there be any logic to us putting in place, if you like, a financial architecture which robbed SMEs that are not fully sustainable but are working towards a long-term future from access to finance? It would make absolutely no sense. So the way I would look at this is, while we have all of this information flow, and to repeat the point, that financing the transition is as important as money going to green. Because if we don't finance the transition, then we will not achieve our targets. So in a way, I would hope that those SMEs that are listening to you and I this evening, who are concerned, is to say it should be quite the opposite, that we should want money to flow and invest in those companies that can make this great change, that can do it in a sequenced way, that come forward to their commercial banks or their local banks with a plan, and therefore that access to finance should not be denied to them. But I don't dismiss the concerns, and I think we need to listen very carefully, as you are, because you were elected from your communities, to those SMEs who are fearful that all of this will rob them of access to finance and in a sense choke off their business activities. SMEs are the backbone of the European economy. They are located in communities and in societies, and they are vital, if you like, for many reasons, not just economic, but for social reasons. I'm very aware of that as a former member of the European Parliament, as coming from a member state. We all know the value of SMEs. So I take on board very clearly this evening what you are saying, Angelica, but I equally hope that what I'm saying in return gives you some comfort that we are wanting investments not in just the gold standard, but actually the biggest transition will come from investing in companies that have a plan towards sustainability in a step-by-step manner that doesn't impact them too drastically, but at least shows the direction of travel for those sectors. And there's more to be gained in doing this than to be fearful of.
Commissioner Merritt, thank you so much for that. And let's bring in Markus Ferber and Professor Zeitler maybe finally again. Markus, you be so kind to take the floor again.
Let me give you a few remarks. Thank you very much. Number one, taxonomy covers only financial instruments. To be very clear, the classical loan, the mortgages are not covered by taxonomy as long as they are not sampled. So if you go to the bank as an SME and you ask for a loan, is not a question of taxonomy, to be very, very clear. And I fought for that from the early beginning, to keep loans out, because of course we want SMEs to invest in sustainability and to make their future bright and even existing beyond 2050. But therefore, they have to fulfill legal obligation, and it's not up to the bank to prove again if you have the allowance for dust reduction, whatever, from the authorities, that the bank has to give additional approval on that as well. That was never our understanding. We think, and we did a lot of work in the last 10 years to have a risk approach in the financial sector after the bankruptcy of Lehman Brothers. And we achieved a lot in that for stability of our banking system. And I think we should keep that and not create the next bubble, which could be a green bubble, but a bubble is a bubble, whether it's for good or bad reasons. At the end, it creates huge problems for the financial sector, and we should avoid that. So loans are not covered. What taxonomy is foreseen for is to bridge the information gap between offer and demand. And there's a huge demand from the demand side to invest in sustainable finance products. And that was the driving force from the early beginning. And we have to be aware, or we have to be very cautious, because my example, and Myrat has heard that for 100 times, I think, but sorry, I have to repeat it, is the food sector. In the food sector, we have so many standards, so many labels, consumers are confused, and we have not bridged this information gap because we have an overflow of information. Taxonomy tries to identify what is really sustainable, number one. Number two, of course, we have to be aware that, I use this word again, the absolutists want to introduce these taxonomy rules now almost everywhere. And even European Commission, Myrat, is thinking, also we don't have a standard for government bonds, that minimum 30% of the RRF bonds or next generation EU bonds from the European Union will be sustainable bonds. It's very easy, as member states have to fulfill minimum 35% investments in sustainability, so therefore you can use this information, but honestly we don't have a standard for government bonds when they will be sustainable or when they will not be sustainable. But this market is very attractive, and therefore our industry is interested as well, to be very honest. And even in the energy sector, we have companies who placed corporate bonds in the market, fulfilling sustainability objectives, and therefore made a great placement in the markets with low interest rates. So the market side is prepared for that. And that's why, Franz Christoph, in all our friendship, I was very skeptical in the beginning as well. But I see the possibilities, and we should concentrate on the possibilities, but we should not overdo the screw when we would introduce all this stuff in all details. If you look to the Green Deal, taxonomy is only a part of it. We will have emission trading system, which has the main issue to create a fair price for CO2 emissions. I think that is the most market-driven model. And if we expand the areas where ETS comes into force, then I think we have really found a market-driven approach where we do not need any additional information, as price is the best thing to incorporate issues in our economical model. And on the other hand, we will have, like Franz Christoph, you mentioned Euro 7. If we say a new compulsion engine has to reduce its emissions, they have to fulfill the standards. So you can't say that has to be additionally driven by taxonomy. BMW, to take a Bavarian company, has to invest that they are able to fulfill these new criterions. And therefore, taxonomy is not needed additionally. So we have a mixture of different things, and only financial area is a part of it and not the solution for almost everything, that we have to be aware. And last thing, as that is really something I'm concerned, and Myrat has heard this story from me more than once. If I remember the legislation procedure, we had a lot of open questions, but everyone wanted to deliver. It was the end of the legislative term before the elections. Everyone was interested to have a solution. And then we found these wonderful European solutions. The European solution means we as legislator, we are not able to answer questions, how to deal with nuclear, where I'm really concerned, and I don't think nuclear is sustainable, to be very clear. I'm an engineer, so I look from the technical side to these issues. But we defined, for example, on level 1, gas as a transition technology and enabling technology. And therefore, I think enabling technologies should be incorporated in level 2, for example, in the taxonomy, because it was a clear signal. But we left a lot of question marks to the Commission. And now to blame the Commission that they have to address these question marks and find answers to that, I think is not fair. Legislators failed to find an answer. We put it, or we solved it on level 2. Now we have the same fights we had on level 1 as well. So I don't see a democratic gap. And Angelika, you asked me about the next steps. As all RTSs, we do scrutinize them. The committees to scrutinize the RTS on taxonomy is Environment and Econ. And we have not yet had a meeting, but we will organize it in due time. And then the negotiation team for taxonomy will have a look and a discussion with Commission and maybe with some other stakeholders. And then we have to decide whether we accept or we reject this regulatory technical standard. And the same goes for the Council side. We have to do it by qualified majority. The Council has to do it by qualified majority as well. And that will be the questions we have to answer now in the next months, as the scrutiny time after the official presentation is 3 months. So I think the clock is ticking, and we have to do our approval and our tests on this RTS as the Council has to do.
Markus Ferber, thank you so much for your comments and also for clarifying the procedure in Parliament. Professor Zeitler, please.
I would just add some remarks. Thank you, Markus, for the clarification. I think I will take this as a reassuring answer also from the Commissioner that there are even under the table now plans for measuring the credit risk in the same way under the taxonomy, because I remember the once action plan of the Commission some times ago. He mentioned to introduce taxonomy criteria also for the credit risk. But I think I hope that your answer is reassuring, and neither on the table or under the table it is prepared to apply this system for the credit risk as well. Thank you.
Thank you very much, Professor Zeitler. I'm also reassured because you hear different stories about the credit risk measurement. So for that, I think this was very good to clarify that. It's up to me now to finish or to terminate our discussions. Thank you so much, dear Commissioner Merit McGuinness, dear colleague Markus Ferber, dear Professor Franz Christoph Zeitler, for the very, very interesting exchange of views. And thanks again also, Commissioner, for being open and for asking for feedback on the proposals lying on the table. We will use that opportunity in the right format. Thanks again for having the chance to discuss all the topics today with you. I think we all have a common objectives. We want that carbon neutrality is going to be achieved until 2050 at the latest. We want a green transition to take place, but we also have to ensure that that our jobs are going to be in the European Union, and that our SMEs are going to economically prosper, and that the value add is going to be here in the European Union, in the member states. That's what we want. And for that, we have to, I think, always carefully consider, what comes from the legislation part. We want to prevent bubbles. We want to prevent a bureaucratic monster. We want that it's going to work in real time. Merit McGuinness, you stressed that very much. You are open for any comments on how to make it happen, how to make it real. I learned that Commission is planning to go for a coherent approach. And again, I got reassurance that, SMEs are in the heart of the commissioner in charge. So that is a good message for today as well. Again, thank you for joining this discussion, this debate today, and to our dear guests who were listening to us today in this conversation. So thanks for being connected, and use the opportunity and let us know what you think about. You can also address your comments to the Wirtschaftsbeirat Bayern, and you're always welcome to become a member of the Wirtschaftsbeirat Bayern. And we are also, of course, happy to forward any comments also to the Commission. So thanks a lot for that, and enjoy the rest of the day or the evening. Thank you, and looking forward to see you soon. Bye-bye.
Wiedersehen. Tschüss. Bye-bye.